Welcome to TradeTheMBA.com. This is John's report. Is for the 8th, and well, yesterday was pretty much a dry experience. There wasn't a whole lot of anything that took place. There's no real way to describe it. I think everyone's just sort of like kind of frozen, waiting for the final tax, I guess you would say, conference committee, adjustments as to what things will actually be. It's going to be a net positive for everyone in that sense, but who the bigger winners are, where you can cyclically move your money into, that's going to have the greatest impact based on the tax benefits is really what the key is. Also an important one was we did not get a DOC spread, which means that sign remains under the red, maintaining its bullishness. We kind of expected that simply because we had the reset of the steel. And having the steel coming from underneath means that you weren't looking at a situation where you're overbought and then you get the steel and then it breaks down below at the same time. That's usually a bit more of a down thrust. And so just like we talked about, this is early 90s revisited, exact same kind of configuration. NASDAQ still running behind, but it's pretty much filled back that entire decay day. We still have some wreckage here in the shakeout, and it hasn't completely restored itself, but we started up with a strong buy cross here of the midterm buyers over the long-term ones right here in the red, and the sign continues to drop, and that's actually getting significantly lower, which usually leads to a little bit longer run before a little bit of a turnaround, which means consolidation may not be over. So bird exit finalized. That's going to put some more downward pressure, I would think, on the euro, because now actual discussions of what the breakups will be in the new trade agreements, and so that is going to have a significant impact. This is still way outside the range, so still comfortable for maintaining the S&P, not a problem at all. That this was a ridiculous trade in the first place, and I've been incredulous about the whole idea of it. There's not many places for rates to go but slightly higher or remain flat, so to continue to build this up would have been strange. And oil, breaking down below these levels here as it started to decay, and this is a shot. We still have further to go. It needs to come all the way back down to the 1056 range, and again, that will help from an inflationary standpoint. And because we're not seeing any of that inflationary standpoint, again, we've been waiting for the renewed buy for gold, and it just hasn't materialized. Despite all of these little pop downs, every time we looked at it, we kept saying, well, we haven't reached a reset point where it's going to actually show some signs of significant breakout. And in lieu of that, we've been seeing an absolute inverse relationship to Bitcoin and gold. Very interesting to watch when you see these things happen real time. And we noticed it a little while back, and as Bitcoin now has started to really get momentum, gold trade has faded off dramatically right in there. So look at the narrow. You go from this huge to this tiny little spacing here. We're going to contract rollover is going to be happening, so that's going to be making all sorts of changes as well. So it just gets into an interesting little mid-phase as you look at it from live. Obviously this was already moved into the March when you use the ad symbol, but if you're looking at the local data, it gets difficult. Sometimes you have to pick which week you're going to do your movements and start to switch over to a new contract. Anyway, but we can see nice on the reset from the dip right at the 50%, and boom, has maintained itself all the way above it, and that makes it easy, because as long as you have a climbing 50%, you're moving along. And the new highs are important because as the low starts to climb, the thing we're not getting though in these last couple of days is enough range to make a movement, but I think that's just a paralysis, and it's going to probably last for a couple of more days. I think there have been a lot of little interesting rumblings both in Washington as well as, that's the primary focus that everyone's thinking right now. And there doesn't seem to be any major upset at the whole announcing of Jerusalem as the capital of Israel did not create this worldwide mass destruction that people were sort of like concerned about, and so that's really meant that things haven't gotten out of control, and so that's good from a financial aspect. So the status quo just means that things are going to continue to move. Everyone's going to be waiting for GDP numbers and that. The manufacturing numbers were super fantastic, so got to wonder, it's going to put some pressure at some point on wages, and we'll have to see when that actually takes place. The only other major event that's happening is Grace is having her birthday party, and that's going to create all sorts of excitement on a Friday night, go figure. I know even though her birthday's not for, another 11 days, but whenever you get into that holiday weekend, holiday month, everyone's schedules get filled up. So we'll just keep having at it and continue to let a little bit longer trends ride. Something I always recommend to people when it comes into a holiday period, because you're not always going to have enough range in some of the days to make a difference. But if you've got the general direction correct, then usually you get a pretty decent swing out of it. So, as always, though, trade well, and I will post on the Skype chat as necessary. This didn't warrant anything.